Meet Sarah. She's like many of us, navigating the complexities of the financial world. She's diligent, saves a portion of her income monthly, carefully planning for her future. And like a growing number of people, she actively invests in the stock market, hoping to grow her wealth over time. But when headlines scream about market crashes and economic uncertainty, Sarah panics as she sees her portfolio shrinking, watching her hard-earned gains seemingly disappear. That fear, it's universal. It's a primal reaction to perceived financial threat. Every investor, from novice to seasoned professional, faces it at some point in their investing journey. The immediate instinct is to sell everything and run for the hills seeking safety and cash, but that often locks in losses, turning a temporary downturn into a permanent setback. The market's ups and downs, the inevitable cycles, volatility, are a fundamental part of investing. They are normal market fluctuations, not a personal attack on your finances. Instead of reacting emotionally to every dip and peak, focus on building a resilient portfolio that can weather any storm. Diversification is absolutely key to long-term success. Don't put all your money in one single investment or asset class. Think of your investments like building a house, a strong and stable structure. You need more than just glass. You need a variety of materials for strength and durability. Stocks alone, while potentially rewarding, are fragile and vulnerable in a market storm. To weather those inevitable downturns and emerge stronger, you need a well-balanced mix of diverse assets like bonds, real estate, and commodities. Sarah realized she needed to strengthen and diversify her overall financial foundation to achieve long-term stability. Let's take a closer look and see exactly how she went about doing it. Many think cash is safest when markets fall, a safe harbor in a storm. But holding too much cash, especially for extended periods, loses value over time. It's a slow burn, but a real one. This is thanks to inflation, the silent wealth killer. Inflation quietly erodes your purchasing power. It's like a hidden tax on your savings. Simply put, your money buys less each year. The same amount of cash gets you fewer goods and services. Even with interest from traditional savings accounts rarely keep up with rising prices. The interest earned is often less than the inflation rate. So just saving in a traditional sense isn't a viable long-term strategy. It's a short-term safety net, ideal for emergencies, but not for building lasting wealth. To truly grow wealth and secure your financial future, your money needs to outpace inflation. It needs to work harder than just sitting in a bank. Enter alternative assets, investments that behave differently from stocks, offering diversification and potential inflation protection, or cash. The classic example, a time-tested hedge against economic uncertainty, gold. For centuries, across cultures and economies, people have turned to gold, recognizing its intrinsic value. When they lose faith in paper money or when inflation threatens their savings, gold can't be printed on a whim, diluting its value, making it a powerful store of value, a tangible asset in uncertain times. It's a defense against inflation's silent theft, a way to preserve your wealth. That's why gold remains a cornerstone for protecting wealth, a fundamental part of a diversified portfolio. But how do you actually invest in it, and what are the different options available? Gold's allure extends far beyond its aesthetic appeal. Its true value isn't just about looks. It's rooted in something much deeper. It's about scarcity and the inherent trust we place in it as a store of wealth. Gold has maintained its value for centuries, a testament to its enduring appeal. Unlike cash, which governments can print at will, potentially devaluing its worth, gold can't be created on demand. This finite supply is what makes it a reliable store of value, a safe haven during times of economic uncertainty. When markets tumble and economies face turmoil, gold often holds steady or even rises in value, acting as a counterbalance to market volatility. It acts as a hedge, a form of insurance for your portfolio, shielding it from the worst effects of economic downturns. By adding gold to your investment mix, you cushion potential losses when stocks fall, providing a buffer against market fluctuations. Of course, you don't need to stash gold coins under your mattress like in the old days. While owning physical gold is certainly an option for some, it comes with the practical challenges of secure storage and insurance. For most investors, gold ETFs offer a simpler and more convenient alternative. These ETFs buy shares that represent real physical gold stored securely in vaults. Gold ETFs let you invest in gold easily and efficiently, just like buying shares of a stock through your brokerage account. With ETFs, there's no need to worry about personal safes, security systems, or the logistics of handling physical gold. A strategically allocated small position in gold can smooth out your overall investment ride, reducing the impact of market downturns. Ultimately, it's about balance and diversification, not about betting everything on a single asset, no matter how appealing it may seem. Remember, gold isn't the only alternative investment option available. Explore all possibilities to find what best suits your financial goals. Enter digital gold, Bitcoin, and other cryptocurrencies. Like gold, Bitcoin is scarce. Only 21 million will ever exist, making it quite unique. It's decentralized and not controlled by any government or central entity. Some see it as a hedge against inflation, but it's far more volatile than gold. Bitcoin's price can swing wildly, making it a potentially risky investment. If you invest, do so cautiously. Never invest more than you can realistically afford to lose. For most, crypto should be a tiny, speculative slice of your portfolio. The real key, diversification and education. Don't go all in on any single asset. Mix stocks, gold, and maybe a dash of crypto for a robust foundation. Learn what you're buying and, more importantly, why. That's how you build wealth and peace of mind no matter what the market does.